comes to the powers of the presidency, I think that it's pretty extraordinary that we should be able to use the trade deficit as a national emergency sufficient to put down what effectively amounts to a $700 billion tax increase on the American people, if you're talking about them paying the price of the tariffs on the other end. Congress, I think that if things get bad enough, there are a bunch of streams obviously here that cross. One of the big things here is that Congress is up for re-elect in a year and a half. And if the Republicans lose Congress in a year and a half, then whatever tricks President Trump is trying to pull in terms of being able to rejigger the rate at which we are paying back our national debt, all that stuff goes by the wayside, because if Democrats win Congress, pretty much everything comes to a crashing halt. And there are a lot of Republicans who are in swing districts or in, say, R+5, R+10 districts who are suddenly going to feel pretty vulnerable. A recession takes everybody with it. It takes Secretary Bessent, it takes the president, it takes J.D. Vance, it takes everybody with it. Recessions tend to crush the president who is in power at the time, regardless of what their long-term plan is. So when they say short-term pain for long-term gain, again, I think that there are a few factors here that I would like to see played out. For example, if there is an inflationary effect to the tariffs in terms of price, does that mean that Jerome Powell is going to inject additional liquidity into the markets by decreasing interest rates? It's hard to see how. I mean, he's holding the interest rates steady right now without decreasing the interest rates, despite President Trump basically blasting him publicly since before he was even the president formally. He's just the president-elect at that time. So again, it's hard for me to see how all of this squares into what looks like a really well-calibrated policy. And then beyond that, in the long term, tricks that we play with regard to the rate of interest, paying back our national debt, are not going to be sufficient to pay back our national debt unless we have robust economic growth. And so a lot has to be bet on the robust economic growth out-earning, essentially, the levels of debt that we are currently racking up. And while I love what Doge is doing, the systemic drivers of our national debt are not actually being touched at this point by Doge. I mean, it's the means-tested welfare programs that are really the systemic long-term drivers of our national debt.
And military, I think, would be number two, yeah.
Military as a percentage of the GDP, or as a percentage of the budget, has been relatively stable, and in some cases decreasing since the end of the Iraq War.
True.
But that when it comes to the means-tested welfare programs, those continue to grow as a percentage of the budget, and over time are increasingly unfunded.
Yeah, as our population ages and the population grows. Freeberg, putting aside executive power and the midterms, which, that would change everything.
Are you ready to dive into the world of stock market ups and downs with a twist of turbulence? Brace yourself as we unveil the latest roller coaster ride in the market involving one of the big players in tech, Nvidia. Just imagine, $183 billion worth of value vanished in a blink, highlighting the fragile nature of even the most established names in the tech domain. The storm is brewing, and it's time to unravel the drama surrounding Nvidia. Welcome back, everyone, to Investocracy.
Inflation and tariffs and the chance that this comes back and explodes in the administration's lap.
Well, I think there are three consequences, not necessarily related to inflation, that are just worth spending time on, one of which I don't think gets talked about enough. The first is just the challenge of tariffs in general. And I shared this clip with you guys over the group chat yesterday from Ronald Reagan talking.
Oh, it's so funny. I have it queued up. I actually edited it. Let's do that. Let's play this clip and get your reaction.
And today, many economic analysts and historians argue that high tariff legislation passed back in that period, called the Smoot-Hawley tariff, greatly deepened the Depression and prevented economic recovery. You see, at first, when someone says, let's impose tariffs on foreign imports, it looks like they're doing the patriotic thing by protecting American products and jobs. And sometimes for a short while it works, but only for a short time. What eventually occurs is, first, homegrown industries start relying on government protection in the form of high tariffs. They stop competing and stop making the innovative management and technological changes they need to succeed in world markets. And then, while all this is going on, something even worse occurs. People stop buying. Then the worst happens. Markets shrink and collapse, businesses and industries shut down, and millions of people lose their jobs. The memory of all this occurring back in the 30s made me determined when I came to Washington to spare the American people the protectionist legislation that destroys prosperity.
So let me just say three things that I think are going to be important consequences, one of which doesn't get talked about much at all. The first is the important point about the decline in competitiveness that arises when you use protectionist tactics like import tariffs. So ultimately, in order to be competitive in the market, you need to have a free market to test how good you are relative to your competitors. And if you use tariffs or other taxes or other government intervening systems to distort the natural forces of markets, meaning there's a buyer and a seller, there may be multiple sellers, and ultimately the buyer will choose the best seller, then you're creating a disincentive for American enterprise to be more competitive. We lost manufacturing because we weren't competitive in manufacturing. Putting a tariff on other manufacturing countries does not make Americans more competitive. It basically gives American businesses a crutch.
In the buzzing world of the stock market, one must learn to laugh amidst the chaos. So here's a little jest for you. Why did the stockbroker bring a ladder to work? Because he heard the market was reaching new heights, just like Nvidia before the recent turmoil. As we navigate through the intricacies of Nvidia's financial saga, one thing becomes clear. The stock market is a realm where surprises are the norm. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
Yeah.
So let's talk about manufacturing. So if I'm using a traditional assembly line with low efficiency systems, I'm going to be more expensive to make a device than a Chinese factory that's built with a lot of automation, high efficiency systems, et cetera. And so if I'm saying, well, to buy the Chinese product, you got to pay twice as much because there's a tariff now, the American company does not have an incentive to invest in automating or building better technology or adopting new technology to make themselves competitive in the marketplace. So that's the challenge with tariffs long term, is that they distort economic consequences that arise in a traditional free market system. The second consequence I think is important is under this guise and in the near term, the effect of some of these tariffs is going to be the loss of revenue for a significant chunk of the American businesses. In particular, I'll use one example. People may not remember this because it wasn't that big of a thing, but between 2016 and 2020, during the last Trump administration, there was a continued kind of tariff and trade escalation between Trump and China. And during that time, China stopped buying American ag exports, and China is the biggest buyer of American agricultural products. As a result, the Trump administration had to issue 2 support payment checks to farmers that totaled $28 billion in 2018 and 2019, just because of that China stepping out of the buying market. American farmers represent a large amount of the voting bloc for the Republican Party. And so I think that the second consequence is going to be that there is going to need to be financial support, which means increased government spending if we intend to keep the tariffs in place and the global market stops buying American exports. That's the second consequence. The third consequence, which is the one I am most worried about.
Delving deeper, let's look at the numbers that narrate Nvidia's story. The escalating trade war has become a stumbling block for the tech giant, with tariffs threatening to reshape its market landscape. Dimitrov's insights hint at a possible downturn looming over Nvidia, urging investors to proceed with caution. Twitter becomes our window to the world of sentiments swirling around Nvidia. Analyzing the tweets provides a glimpse into the collective consciousness of investors, offering valuable insights into the market's pulse. It's not just about numbers, but the stories behind them that drive the stock market's narrative. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Yes.
Right. So so I'll give a very specific example. A friend of ours runs a 100+ year company. I'm just going to say it in generic terms so that I don't betray his confidence.
Sure,
but
no problem.
And this is a business that's been built over 100 years, owned by an American family, an incredible family, and they make products that we all know and love. And what did this action do? So in their example, they're in a very difficult position because they have, as David said, a very tight operating margin because they have to compete ferociously against China. And they've done everything possible to maintain their capabilities in America, hire American workers in the heartland, but still compete against China. It's tough. And this action today swings them from profitability to a potential yearly loss in a meaningful order of magnitude, like hundreds of millions of dollars. So, Jason, that's the other side of this tariff coin. So we have to find a way of finding those examples, and as Ben said, excluding them somehow or giving them reprieve, because that wasn't the intention, I think, of what Trump was trying to do yesterday. That's an example of a company that should be winning and should continue to win and fight the good fight against China and try to continue to employ thousands of Americans. But this thing, because they had some capacity in some other countries, not China, by the way.
Got it.
Blows the thing up, and so now you have to fix those things.
All right.
After this whirlwind journey through Nvidia's tumultuous times, one question lingers. Should you invest? The current state of Nvidia portrays a realm of risks and rewards, with analysts' divergence echoing the market's unpredictable nature. As we draw the curtains on this narrative, we invite you to ponder. What's your take on Nvidia's saga? The stock market saga continues, weaving tales of triumphs and trials, waiting for investors to script their own stories amidst the ever-changing landscape of finance. But what do you think? Share your thoughts down below. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.